Meta just reported earnings. The stock is up 6.5% in the after hours. Absolutely amazing reports. They pretty much crushed it. Massive beat in earnings per share, 888 versus 823 expected. They also beat on revenue. Now, what's really surprising to me in the report is Meta is still growing 24% revenues, and they're expected to grow 30% in revenues in Q1 of 2026. I don't know many companies over $1 trillion in market cap. They're still growing 24% in revenues, not in earnings per share, in revenues organically. And it really tells you that the capex that Mark Zuckerberg is spending right now in 2026, it has nothing to do with the metaverse hype and the metaverse dream that he was spending on, and he wasted all this money back in 2021. This is actually driving organic growth. It's driving revenue growth. It's driving efficiency. And I'm going to talk about this a little bit more. And I was talking about it in my videos many times. And that's why I started a position in Meta, and I've been buying the dips on the stock. And I thank Mr. Market for the opportunities and rationality in general. Earnings per share was 888. It was their highest earnings per share quarter ever. The company is still growing in daily active people. Over 3.6 billion people use the app every single day. And I always talk about how this is extremely underrated, and it goes under the radar within the company because the company has access to 3.6 billion people. Meta can decide to launch an app tomorrow, or a website, or actually a decent AI product, like something as good as Gemini or ChatGPT, and they don't have to spend any money on advertising. They own the advertising bridge, you could say. They're like a toll bridge for advertising, and they can reach 3.6 billion people overnight. The reach, and this should be worth much more than 22 times earnings or 20 or 21 times earnings. Yet this is where Meta is trading at. And to me, it's absolutely ridiculous. Now, for their capex, it was also ridiculous. 115 to 135 billion for 2026, which is double what they spent back in 2025. And many people were surprised that why did Meta guide for 135 and the stock went up? People were expecting for Meta to go down on such high capex guidance. But there's a reason for that. And the main reason for that is the market is starting to realize that this capex, again, it has nothing to do with the metaverse, mansion in the metaverse, and buying land online or whatever that is, and some crazy things. This is actually helping them. They're finding efficiencies. They're making money from it. And this, they said it themselves. They said, we've seen a 30% increase in output per engineer, with the majority of that growth coming from the adoption of agentic coding. And they're also seeing more efficiencies in other areas. They're also helping their ad business. And we talked about this before. They made like 60 billion from ads related to AI, how AI is helping them. And they're using AI to help, to create like agents that help businesses when they advertise. They could ask them questions and they pretty much help them in general. So this is, to me, is absolutely crazy. And there's another reason why the stock is up, and this is Reality Labs. Reality Labs has been a money-losing business for many years, and it keeps losing more and more money every single quarter and every single year. But this is what Mark Zuckerberg said. He said, I expect Reality Labs losses this year to be similar to last year, and this will likely be the peak as we start to gradually reduce our losses going forward while continuing to execute on our vision. And that gives the market a lot more certainty because they were expecting the Reality Labs business to be a mind-losing business forever and losses to keep on increasing. Well, now it's speaking and losses are about to be reduced over the next few years. The CEO is even laying off more than 1,000 Reality Lab employees, and they're trying to focus more on VR and wearable devices such as the Meta Ray-Ban smart glasses, which have been a massive success. Now, I just told you about a company that's likely going to be leading in AI. AI is helping them find efficiencies. They own WhatsApp, they own Instagram, they own Facebook, they own Oculus, they own the Meta smart glasses, which is doing really well. They have access to 3.6 billion people every single day. They're growing 24% and 30% in quarterly revenues. Where do you believe the stock is trading at? I would say 30 times earnings, 28, 29 times. Well, Meta is trading at 23 times earnings. Despite the recent rally, it's still trading at only 23 times earnings. And this is extremely undervalued relative to other stocks where Microsoft is still at 28 times, Apple 31, Google 31, Amazon, which I own, is at 32, and AVGO is at 35 times earnings. Now, the reason why Meta trades at a lower multiple is because 99% of the revenues is advertising. But the CEO mentions that over the next few years, the company is exploring new products that will allow them to diversify away from advertising. And if they can successfully scale those other products, maybe it's a cloud business, maybe it's some kind of another subscription-based business, that could provide the company a massive multiple expansion. Because a company with the reach that Meta has, it should be trading much more than 23 and 24, maybe 27 or 28, or potentially 30 times earnings. But there's also a call option that's not really priced within Meta. And this is Meta potentially being number 2 or even number 3 or even number 4 at least on this chart of the generative AI traffic share. If you look at this chart, you see ChatGPT, you see Gemini expanding, you see DeepSeek, and you don't really see Meta pretty much at all. And the reason for that is Meta has a terrible product. They have 3.6 billion people, but they have a terrible product. And they're going to be launching more and more AI products over the next few months going into 2026. So if Meta actually has a good product, and this product is within WhatsApp, within Instagram, within Facebook. Most people, they spend time on WhatsApp chatting with their friends. If Meta has a good chatbot, why would they need to exit WhatsApp to go to ChatGPT or Gemini and then go back to WhatsApp if they could just do it while they're chatting on WhatsApp? Why would they do it? Why would they have to exit Instagram to go to ChatGPT if they could do the AI stuff on Instagram and edit the picture and post it right away on Instagram? Or maybe something related to Facebook, or maybe something within the Meta smart glasses. So Meta has the potential to be a leader in terms of an AI traffic share, but they're not even number 2, they're not even number 3 or number 4 on the chart. And I believe that could be a call option on the company that could happen in 2026, and it's definitely not priced in the stock at 22 or 23 times earnings. I still believe Meta is worth over $1,000 per share. I still see more than an 18-20% annual return. I think earnings per share after 2026 should grow about 18 to 20% in line with revenue growth as margins should pick up. So it's pretty much trading at about 1 times, almost 1.1, 1.2 times PEG ratio or price to earnings growth. And I think we should get a return pretty close to the earnings per share growth of 18 to 20%. So that's my opinion on Meta. Hope you enjoyed it. It was not financial advice. If you did enjoy it, please press the like button and maybe consider subscribing. So I'll talk to you in another video.